Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video currency breakdown. This morning, we're going to be looking at the Great British Pound USD. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as traders and help put a little bit of extra money in your pocket during these troubling times. And as we always say, why do the hard work when we'll do the hard work for you? All you have to do is watch and enjoy our content and apply it accordingly into your trading. Okay? Only thing that we ask is you like, subscribe, and share these videos. Subscribing to our channel allows you to get up to date, allows you to get up to date when our videos drop, and you can be able to get the notifications to let you know when these videos drop. Liking and sharing also pushes our content out there so we can get more Forex traders to join our community because we want to build a community of consistent, profitable traders. Okay, that is the goal, is consistent, profitable traders. So I'm pretty sure everybody who's watched these videos and traded Forex has won a trade. Okay, it's not about winning a trade, it's about being able to win a trade no matter the market, no matter the season. Okay, so with that said, let's go ahead and get into what's happening with the USD, with the Great British Pound USD. Now, before we get talking about the technical analysis of what's physically happening on a chart, one thing that we do like to discuss is what is happening with the currency pairs first, because basically what happens on the currency pair is a mirror image of what you can see on the charts. Okay, so with that said, let us get into what's happening with the British pound. Okay, so the British pound has a couple factors that's affecting its current strength right now. Okay, and first of all, we do have the geopolitical factors that's affecting it from the overall uncertainty of the entire European continent's economy as a whole, even though the UK is not a part of the EU through Brexit a few years ago. It is the EU is one of its closest trading partners, and when one of your closest trading partners are weak, you start to get that weakness too. Okay, so we have that factor going on, and this is what's affecting the EU is basically the destabilization of the entire European economy related to the Russian-Ukrainian war. Okay, then we have overall inflation hanging over the United Kingdom, the entire country, and that overall inflation is growing. The CPI numbers came out around 2 a.m. Eastern time throughout the London session uh, this morning. And based off these numbers, what we're seeing that is inflation grew because their consumer price index actually went up higher than what it was forecast and higher than what it was previously before. Okay. So in normal trading circumstances, or let's say non-inflationary trading markets, that this increase in CPI numbers would actually be good for the currency. Okay. But in the current climate that we're in now with this inflationary trading market that we're in, high CPI numbers is just basically evidence of how bad inflation is hitting your economy. Okay. So that means that these high CPI numbers means that the inflation happening in the UK is growing, and that's not good for the overall strength of the British pound, of the Great British Pound as a currency. So we're going to continue to see a weakening of the British pound. We may see initial uptakes in strength, but we're going to see an overall weakening of the British pound as we get into the mid part of this trading week, going into the latter part of this trading week, and even going into the beginning of next trading week. Okay, now let us talk about what's happening with the USD. The USD is actually one of our stronger currencies heading into the mid part of this trading week. Prior to making this video around 8:30 Eastern time, before the opening of the New York session, we did have some PPI news come out about the USD that shows that that was some good news. Both numbers were actually better than what it was forecast and better than it was previously. And that means that we're going to see a continuation of the strengthening of the USD. We did have some CPI numbers come out yesterday, 8:30 Eastern time, prior to the opening of the New York session. These CPI numbers are basically being interpreted as a shrinking, as a stagnation and peaking of inflation, which means that eventually inflation, that dark cloud of inflation hanging over the American economy is going to start shrinking. It's stagnating first, and first after the stagnate, then it shrinks. Okay. Coupled with all the other good economic news that we have been coming out with the USD and how active that the Feds and the American government are taking to combat inflation, and so we are seeing an overall good trajectory of continuing to gain strength of the USD. Okay. Then we also having a drop in gas prices at the pump, which is making the value of the USD getting higher as well. To understand the non-traditional relationship between oil and USD that was basically birthed due to the current status of the geopolitics in the world today, I strongly suggest that you watch the USD CAD video so you can get an understanding of that relationship. Okay. Now, with all that said, let's go ahead and break down what's happening in these on these charts. Okay. So, what are we seeing here? All right, we were in range with this part being the low part of our range, this part being the high part of our range, this being the lower extreme of our range, this being the upper extreme of our range. And we broke that range, and we actually broke below our lower extreme point, which was here. Then we broke below it here. And like I said, this is basically due to reflection of the fundamentals. We have a weakening Great British Pound and a strengthening US dollar. Okay. So eventually we are going to see some retracement. How far can we retrace? We can retrace as far as here, 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 or possibly even here before we continue to go towards the downside. Okay. So we may even actually range out from here and slip down, or we may pick up in price here, 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 or even as high as here before we range out and continue to go towards the downside. Okay. Hope that information was helpful for you guys. Happy trading.